All right, well, let's get started. Welcome to Foe & Sons webinar, Building the Insurance Coverage Case for COVID-19 Business Interruption Losses. I'm Justin Foa, President and CEO of, and I'm really pleased to welcome the over 300 participants from all over the globe. We're going to go through the webinar and then have a question and answer session. Because of the number of participants, the questions need to be submitted through the Q&A section of the Zoom app, which you'll find at the bottom center of the screen. Joining me today, Bernard Goldman, the General Counsel and a Senior Vice President here at Foe & Son. Let's dive right in. It's pretty clear. Everybody's been hit by this pandemic, personally and economically. And there's been a ton of conflicting news about how insurance coverage is responding to this. Conflicting news from insurance companies, from attorneys, and from legislators. And we're here to give you their viewpoints and also to lay out the strengths and weaknesses of their arguments. First, we're going to touch on coverage. Then we're going to go into the claims timing and presentation, and finally into claims preparation. If you registered, you'll get a recording of this webinar at the end, as well as all the materials that we mentioned in the webinar. They're also available on our website, foason.com. There's a big red COVID-19 button right on the homepage. Click on there, and it'll take you to our resource page. In the claims area, you'll find all the documents that we're talking about, including a written Q&A that will mirror on some of the topics that we're going to touch on today. Bernie, let's dive right in and talk about what we're trying to achieve today with this discussion.
So we know that there are some significant obstacles that the insurance companies are raising for coverage. The hopes are to maximize what the possibility is for recovery. So we've been seeing early indications of what doesn't work, and we've tried to take a more thoughtful approach to what we consider to be the best practices.
Great. Let's talk quickly about coverage itself. What are the insurance companies saying about business interruption coverage regarding COVID?
They came out in the first couple days after the pandemic really emerged. They essentially said that something like this was never built into their pricing, their rates. Quick background, insurance companies are required to file certain components for what they charge their customers. So they've said we never price for it. They've also said that this type of exposure was never something that they had contemplated. Some have some additional exclusions that they pointed out as well, but for the most part, they've said those are redundant, that this simply was never baked in.
So what's the reason they're saying coverage is not actually triggered?
So in a standard business property insurance policy, the main coverage item that everybody's focused on is business interruption coverage. It's supposed to make you whole if some covered event shuts you down or limits your operations. The trigger for these things has language in it that talks about direct loss or physical damage. So the insurance companies jumped upon that right away. They said, look, it has to have some type of tangible damage to your property in order to trigger coverage.
Right. You mentioned about virus exclusions. If a policy does not have a specific virus exclusion, is that changing how insurance companies are treating these claims?
If you ask the insurance companies, they would say no. They would. They've come back, and those who don't have it said, look, it just was never built in, and a virus contamination is not direct loss or physical damage.
Gotcha. So in the days after the lockdowns, my emails were flooded by litigation attorneys talking about how they felt that there is coverage under the policies. Can you talk a little bit about the arguments that they're making and how strong they are?
So there's been many cases historically on damages that you can't actually see that could impact somebody's property. There are things like asbestos fibers or noxious odors, fumes, that sort of thing, invisible damage. So most of the coverage attorneys have pulled those cases and are formulating arguments based upon that physical damage, direct loss, doesn't necessarily mean that it's structural damage, doesn't necessarily mean that it's something that you could see and touch.
Gotcha. And how strong are the precedents that they're using?
They vary by jurisdiction. Most are not at the highest courts, but there are some appeal level cases. You're not going to find a case that's directly on point to something like this, because clearly something like this has never happened. But there are decent arguments to be made. They seem to be a little bit more effective where there's been some actual contamination. They're a little bit harder to analogize to where there's no actual contamination. It's maybe just the social distancing orders.
Gotcha. So the case law is favoring where there's some actual contamination rather than you were closed down because of a lockdown by a government reason.
Yes.
Gotcha. Okay, let's talk a little bit about what happens if the courts rule tomorrow that the insurers have to pay. Do the insurers have the money to pay out these claims?
The magnitude of the loss has been estimated for small businesses alone, something in the neighborhood of $300 billion per month. The amount of surplus that insurers have available is something in the magnitude of $250 billion. That said, as we took a look at putting together this program, we don't need the insurance companies paying every claimant. We need them paying our clients and our friends and our family. So we're fortunate they do have enough capital to pay everybody who's attendee for today's program.
Right, and that's the idea. Okay, let's talk about the path to coverage through litigation. Maybe you can start with individual cases, how they're being filed, and how they're being paid for.
The initial cases that were filed, and there's been about 50 of them so far, have really been test cases. So what we've been seeing is that attorneys have been banding together, 2, 3, 4, 5 attorneys, filing similar cases in one common lawsuit, hoping to get some traction in a particular area. Most of those have also involved cases where there's been some direct contamination to the client's business.
I see. So they feel like those cases might have a better chance of getting traction early on.
Yes.
Okay. How about from a class action standpoint? What are some of the challenges to getting a class certified? And if it does get certified, how would the people on this webinar be able to access that class and possibly get some recovery?
Class action lawsuits require that all of the participants in the class have essentially the same arguments, the same issues, the same way that they've been damaged. The challenges for class actions here are that there's multiple policies that are similar, but they're not exactly the same. There's multiple businesses, and there's different degrees to how this pandemic has impacted everybody. Everyone has been shut down, but in terms of the actual factors, they do vary a little bit. The initial class action activity that we've seen has been somewhat limited. It's not yet the huge national players. They've been more of the local class action attorneys. Again, as with the individual lawsuits, trying to see if they can gain traction in a particular area.
And if someone wants to join a class action suit, how would they do that, and how does that get paid for?
Ultimately, class action lawsuits get paid out of settlement proceeds, or if there's a verdict, the attorney fees are part of that. The nice part about class action lawsuits are that the participants in the class, there's no out of pocket. You essentially assign your rights to the class and you assign your right to settle. The downside of that, if we've ever been subject to those things at home, credit cards or other consumer fraud claims, sometimes you might get $2 or $3 as a settlement for a class action lawsuit that the attorneys are getting the line part of the share.
Sometimes that happens. In terms of individual cases, are we seeing a lot of those being taken on contingency, or do people who have had claims denied have to fund those lawsuits?
The initial claims that were filed have been filed by attorneys that are pretty well capitalized. So again, these are more test cases. If there aren't class action lawsuits, litigation is expensive. If you go out tomorrow and you hire your own attorney, they're probably not going to take the case on contingency. But if you wait, the attorneys are banding together, the cases are banding together. So we may find attorneys that they're not willing to take one or two claimants on individually because it's just not worth financially their time, but they may take 100 or 200 on together.
Gotcha. Great. So I think that talks a little bit about litigation and how people might get coverage or payment out of that. What about through state legislators? We've seen in the days after the lockdowns, New York and New Jersey both introduced laws that would compel insurers to pay business interruption claims related to COVID. Both those laws have stalled, and my contacts in the New York State legislature said they don't have plans to try and push them forward because of the constitutional and destabilizing effects they which you can talk about. Since then, some other states, I think 8 other states, have also introduced bills. None of them have yet passed. What are some of the challenges that they have, either constitutionally going forward, and then also in terms of the insurance marketplace?
So the insurance companies came out initially for the first states that introduced these type of bills. They said, look, if you pass it, we're immediately going to court to fight it. Doesn't mean they're going to win, but it does create additional hurdles for the legislators to get something passed. The main arguments have been versus a constitutional argument. So when you watch the movies, people always say, I'm pleading my Fifth Amendment rights. I don't have to say anything. Part of the Fifth Amendment is also a prohibition against illegally taking your property. The government can't take your house without paying you. And there are cases that argue that when the government passes a regulation that takes a private company or individual's revenue away or money away, that violates the Fifth Amendment.
Gotcha. Also, just to footnote this, Bernie, as being the president of the Insurance Brokers Association of New York, and in talking to some of the New York state legislators, they were also concerned that if they were to pass this, not only would it be tied up in court forever, but that it would destabilize the insurance marketplace so people couldn't actually buy business interruption now, which concerned them in terms of the commerce going forward. We've talked a little bit about states. Now let's talk about the federal. We've heard that there is a law in the works, similar to TRIA, the Terrorism Reinsurance Act that was passed after 9/11, that might fund pandemic business interruption related losses. Can you talk a little bit about that?
Sure. So TRIA, the Terrorism Act, came in after 9/11. It was essentially a reinsurance fund. All the insurance companies said, if something like this happens, we don't have enough money to pay it. So the government said, you contribute in, you'll charge a premium to all of your customers, and in the event there's something, we'll serve as a financial backstop. Looking at it for pandemics, it does seem to make sense, some sort of backstop that's similar on a go-forward basis. It's just very complicated. So the funding mechanisms, how you would do it, how you would allocate it, might take 9 months or even a year to figure out. Many legislators have noted that if we're going to do it, if we're going to introduce money on a look-back basis, it would be quicker just to give it to people. So doing it through some type of pandemic reinsurance act, looking back, probably is not the most effective way to get money back to people. On a go-forward basis, it might end up happening, though.
Gotcha. I've been just monitoring some of the questions that have been coming in so far, and I ask you, we're going to get to most of these points. One of the big ones being, has there been any success? And we're going to talk about that and where we think there could be success in terms of getting money in the future. I am going to say that we have not heard, and I've talked to tons and tons of people about any money flowing from insurance companies to clients other than very, very specific policies that included this coverage for event cancellation and some other items. So we will talk about that more and happy to get into that deeper dive, but that's been most of the questions I've been seeing pop up. So I just wanted to say we see them and we're acknowledging them. Let's talk a little bit about talking to your insurance company. One of the big items that I've heard, especially from coverage attorneys, saying, get your claim in right away. Do I need to put an insurance claim in immediately? And if I don't, doesn't that possibly make it that I prejudice the insurer and that they can deny the claim for late notice?
No. There are requirements. Ultimately, you would have to report any potential loss, but it's been pretty well settled that if there's a hurricane, you don't have to report your loss in the middle of the hurricane. That just would be silly. If there's a fire going on at your house, you don't call the insurance company in the middle of the fire. So this is an ongoing situation. Insurance companies have virtually zero chance of being able to deny a claim based upon late reporting because you didn't report it during an ongoing situation. In terms of timing, that probably means that at a minimum, we're looking at 2-3 months after things have somewhat settled down in terms of COVID-19. So many months until the issue of potentially late notice would even be relevant.
Gotcha. What are the downsides to putting in a notice right now?
We've seen every notice of claim that was rushed into the insurance companies has been met with a quick denial. And that really is no different than any other questionable coverage situation that we've seen in the past. So we've seen during hurricanes, utility service interruptions, people that rush to put in the claims in the first days right afterwards. One, you don't have the benefit of other folks' success. So the benefit of waiting is that you see where people are getting traction and you're able to contour your arguments a little bit towards where there's been some success. At this point, the number of claims that are in with the insurance companies are still relatively small, so they have a lot of resources to be able to fight whichever ones come in.
Well, take us through a little bit of the procedure. Let's say that someone were to call up an insurance company and say, I've had some loss due to COVID. What happens next, and what are some of the things that they would need to look out for in those situations?
So the procedure gives a little bit of insight as to why it may make sense to wait. Insurance companies are required by regulation to investigate every claim within a certain period of time, and they have to come back with a coverage opinion. Is this or is this not something that would be covered under the terms of the policy? If you report something in and it's very general, insurance companies must come back to you and ask the obvious questions. Explain yourself. So if you do explain and you're overly specific, they will hold that against you in the future if there's some other arguments that gain more traction. If you're overly vague and you refuse to answer them, they'll eventually close the books on your claim. They'll say, well, you're not cooperating, you're not answering our questions. So you're kind of stuck in a catch-22. Too vague, too evasive, they're going to shut the door on you. Too specific, you're shutting the door on your own arguments later on that might emerge.
Gotcha. Bernie, a lot of the questions coming in are asking about not necessarily whether coverage is triggered, but what would be covered under business interruption. And I think that one thing we should make really clear, most of the losses that people are having, if they were caused by something else, certainly would be covered, but would be paid. So loss of rents, loss of sales, continuing expenses, those types of things are covered under business interruption. It's really about getting the coverage to trigger. Do you want to talk a little bit more about that? Sure.
And even though it's difficult to think in these terms, when we talk about documentation and coverage line items, think more in terms of getting the coverage rather than figuring out what the dollar amount is. You're exactly right, Justin. Business interruption coverage is designed to address any shortfalls in your revenue, any additional expenses that you have because of a covered loss. So once you're through the hurdle of establishing coverage, it's just a matter of accounting, figuring out what your loss is. I'm not saying the accounting is always easy, but that's something that we're very good at. There's many good forensic accountants out there who can assist. That tends to be the easier part. kind of documentation that we're talking about, and you could see some of it, again, if you visit our website, foasun.com, on the resource pages, more about establishing the proofs and the things that actually can help to establish and create coverage.
Gotcha. One more thing about claims process, and then we'll talk more about how to document and present a claim, and then decide if it's something that someone wants to put into an insurance company either now or in the future. People are concerned about getting in line, that money might run out, and that urgency of reporting claims is caused by that issue. Can you address that?
So we've seen that with the payroll protection program. We've all been very active in advising our clients to get in line quick, apply for it, because there's a finite sum of money, and when it runs out, even though it looks like the government is going to be replenishing the pot there somehow. It doesn't work like that for insurance. So insurance companies are required by regulation to treat all claimants similarly. In theory, if the insurance companies run out of money and these things are covered, there are backstops from the government in terms of managing their assets and distributing them. In general, if there are not enough dollars to go around, they're going to prorate it among all similar claimants. So if you were the first in line or if you were in the last in line, in terms of getting access to the funds, you're treated the same. You don't get any advantage.
Okay, great. Let's get more into how does you present your claim? What do you look for in your particular set of circumstances, your business's particular set of circumstances? And I will say that please reference some of the documents that you've worked hard to put together on our website.
So we created a workbook. Again, it's available on the website. We'll be sending it out after this webinar, trying to structure the analysis, the due diligence around all the different areas where coverage could be argued. We talked about business interruption. It's not the only place that your business losses potentially could be reimbursed. So other areas, if there's contamination in theory with some of your key suppliers or key customers, there are coverage line items built into a standard property policy that could address those. If an adjoining facility or nearby facility had contamination and that impacted access to your location, they call that ingress egress. That's also another potential coverage line item. There are civil authority coverage line items within policies. There's also issues there, again, with direct loss and physical damage. But if there is contamination near your property and that results in a government order, in general, the closer it is to your property, the better, but that could in and of itself be a coverage trigger. Finally, there's a concept called attraction properties. So these are things that drive revenue to your business. Best example might be something like hotels around Disney World. If Disney World is shut down, no one's going to be staying at the hotels. So that potentially could cover you. And we've created a workbook to try and structure your analysis and building up the file for each of these different arguments, each of these different categories of how coverage could be triggered. Yeah,
and Bernie, I've obviously got to spend a lot of time with these documents. And one of the things I'd love to point out is that in our sample claim report, we kind of hit on all of these items, which items could trigger coverage and as a business, you'd have to look at it and say, okay, did this happen to me? Now, none of these are slam dunks. I've gotten a bunch of questions that have popped up about, again, maybe we can talk a little bit more about case law and what is out there. Is there a slam dunk? Is there anything that people are hearing that there's some great cases and that coverage should be there? And I just want to get your legal mind around those thoughts.
There are decent cases to make the argument to avoid getting thrown out of court. There's not a slam dunk case out there that says, hey, there's a viral contamination that was direct loss physical damage. And unfortunately, the nature of our legal system, they're state specific. So if Ohio had a case, New York could look at that case and say, we're going to apply it, or they could just ignore it entirely. So nationally, there are a number of cases, and the feeling is that there are decent arguments that can be made. But again, these are arguments. The objective in filing a claim and documenting a claim is to make it harder for the insurance companies to just dismiss you immediately. If your claim raises documentation that implies multiple coverage areas, first off, it may be easier to get an attorney to take the case without charging you up front for it. You might find that one of those gets a limited response from the insurance companies, who don't pay out because they're being nice. They pay out because they realize if we pay out on arguments that are a little bit weaker for us, we'll have a stronger position on some of the other claims.
Gotcha. Some people are wondering, I put in a business interruption claim right after there was a shutdown, and it got denied. What does that mean, and kind of where can I go from there?
There probably is nothing immediately that you need to do with it. So if ultimately it's found that the denial is wrongful, that what you claimed in your initial notice was tripped coverage, then you have a statute of limitations. You have a very long time to be able to make a claim. You also have a very long time to be able to go back and ask for reconsideration. Going back and asking for reconsideration now is only going to be met with something where, yes, we looked at it again, we still think you don't have coverage. It again is part of the reason that we suggest be a little bit strategic and wait. If you filed it, you filed it. Let's just maximize what we have. For those out there who filed it and the insurance company said no, rather than arguing, I would suggest go through the due diligence that we suggested. So those are the arguments that you're going to need in order to get around the insurance company. Where is their actual contamination? How is their actual contamination? Knowing that those cases are a little bit easier if contamination could be two kinds. Could be somebody on your premises or these other locations that tested positive, but could also be someone who tested positive who handled your inventory or they handled your business personal property. The better you can document that, the more effective whatever you're going to do in terms of appealing, and we could talk about that offline, will be. You're going to give the insurance company more to think about and more that they'll have to fight over.
A lot of people are asking about how cleanup of contaminated areas are being treated under policies. I know that's not exactly business interruption, but obviously relates.
So some policies actually have a coverage line item for contamination cleanup. What we typically see is that it requires actual contamination. There's usually sublimits involved, so the policy might have an overall limit for the full policy period. On a large policy, it could be $1 million. On a smaller policy, it might be something that's far less than that. It's actual contamination that's been detected at your facility.
Gotcha. So there may be a coverage trigger for that
Yes.
particular item. People want a little bit more information about civil authority and also possibly ingress egress, which is a coverage that covers you basically if your actual facility is not damaged, but the way you get into your facility. Let's say there's only one bridge to an island where your factory is, and that bridge catches on fire. So can you talk a little bit about those coverages and how they might apply to business interruption caused by COVID?
Sure. So civil authority was one where we heard initially a lot of attorneys just gravitated to it because, I mean, to be blunt, it sounds right. Civil authority, well, that's all we're hearing day and night, our civil authority telling us what we can't do. The actual coverage line items. So civil authority is a government order that would impact your business, shut you down. The trick with it is that it needs to be due to a covered cause of loss under your policy. So the arguments that the insurance companies were raising about direct loss and physical damage, they're also raising on civil authority. They're saying, look, if there's no coverage for viral contamination for you, then a government order shutting you down because of viral contamination is not going to be covered.
Gotcha. Let's talk about multiple locations over many states. Do you need a different claim for each state, or can you put everything together in one claim?
You can put it together in one claim, but the more granular you can be in terms of documenting that, showing what the impact is to the various locations, the more difficult it'll be for the insurance companies. So right now, hundreds of claims, even thousands of claims. The insurance companies each have hundreds of lawyers. They can process these. They can say no very easily. They're going to have tens of thousands of claims and hundreds of thousands of claims. So if your claim is very well documented, they still could come back and say no. They could say, look, we don't feel that contamination is a physical damage, but it does make it much more difficult for them to just dismiss you out of hand.
Bernie, there was a question from somebody about the possibility that they actually got a denial from the insurance company before they even put the claim in. I know in New York State, there was a regulation that required insurers to take a position on COVID-19. Do you want to talk about that for a second?
Yes. So New York State, when they came out initially and asked the insurance companies, demanded that the insurance companies clarify the coverage positions that policyholders would have. Every insurance company initially pushed back in terms of what the task was and how detailed can we really get on it. And we've looked at every major insurance company's position statements that they've sent out. They've all been something along the lines of what we've talked about today, the arguments. We don't believe that direct loss or physical damage of this, we don't believe that this constitutes that. And we also don't believe that this was ever contemplated by your insurance policy, which goes to the point of waiting a bit, because these arguments keep emerging. Every time a state regulator insists that the insurance companies clarify, the plaintiff attorneys are very happy because it gives them more ammunition to go back at them.
Right. It's sort of a game of ping pong in some ways. Can we talk for a second about what constitutes actual dollars of losses and what might be offset against those dollars? So let's say, for instance, someone's down 75% these 2 months, but then there's a bit of a bump in month 3 and 4. Are those going to be offset? Also, any kind of federal stimulus or something like that, would that tend to be offset in a covered claim?
Yes, Justin. So in a more conventional type of business interruption loss, any additional dollars that you receive that help reduce the amount of your losses are taken into account as, they call them collateral offsets. So somebody who imports goods from another country and they receive custom duties back because the goods were damaged, they consider that a collateral offset. Things like the Payroll Protection Program, if you receive money through that program that's forgiven, it's fairly well established that that would be taken into account in terms of an offset to what your losses are.
In terms of the strength of losses, I'm hearing a lot of people say, look, my business was closed or wasn't even closed because of I was considered an essential business, yet I have losses. How does that work in terms of the spectrum of the traction that you're seeing in claims right now?
So on a conventional business interruption loss, one that's less controversial, there was a fire in your location, you don't have to have a complete shutdown. As long as you can show an impairment and it can be calculated, that's a valid claim. But that gets more to the issue of calculating the dollars. Again, calculating the dollars, there's significant support and there's a great deal of precedent in terms of what things go in and how you could document, the dollars impact. Additional expenses that you have also could potentially go in. So if a business had a fire and they had to rent the building next door and use part of the burned down building at the same time, those additional rents would be part of your claim because you didn't have that but for the fire.
Gotcha. I get a bunch more questions about the virus exclusions. Maybe you can talk about them and what we see in the future in terms of virus exclusions as well.
The trial attorneys, the plaintiff attorneys, and once upon a time I was one of them, so I'm not knocking them. They came out right away, pointed out, hey, 90% of policies don't have a viral exclusion. So for the ones that do, we'll put those on the shelf. The ones that don't, clearly you intended to give the coverage. The insurance companies that had the viral exclusions then came out and took the position, you never had the coverage for this, or at least that's our view. We never priced for it. We filed these viral exclusions just to be redundant, to clarify that we don't believe there's coverage for it. But they also are taking the position that the viral exclusions are not necessary for them to deny coverage. There's also been arguments about those viral exclusions, essentially that, so not all of them might mean exactly in a court what they say on their face. But,
Gotcha.
but the arguments are being framed on both sides, pro and against.
Wonderful. So what I'd like to do now is maybe just quickly, I'm going to share my screen and show people how to access the materials that we're talking about, and maybe some of the other materials as well, just so that people see how to find it and what's there. So here's our webpage, and there's the COVID-19 resources. Lovely message by me. And here in the claims area, you'll see information. There's a 5-minute FAQ, which talks a lot about some of the talking points we've had today, a bit of a deeper dive into how Bernie thinks that people might craft better claims. Now, we're not saying these claims are necessarily bulletproof. Nobody knows. There's tons and tons of uncertainty out there. And anyone who tells you otherwise is not being truthful. But we've been trying to look at this and say, where are the cracks? Where are they starting to form? And how can we start to help our clients document it so that they can actually have a good shot if the cracks get bigger? There's also a sample report. This report here talks about how you might want to present your claim. Now, we'll help you with this, but these are the arguments that you'd have to start to think about and which ones might you have. If you have none of these, it's going to be a weaker claim at the outset than if you have all of them. And then finally, there is a workbook here that Bernie's put together, and it'll help you look, if 3 or 4 months go by, a lot of this information is going to be lost to memory. So things like suppliers, transportation logistics, key customers, and your non-owned impaired locations, as well as your own locations. We'd love you to go in there, make some notes, talk about what happened, who to talk to, who told you the information, so that when it's time to put in a business interruption claim, you have that information at your fingertips, and it's a lot easier to go forward. As we said, once the coverage is actually, don't worry so much about the dollars, although that's important, you're going to need to keep records. But once the coverage is tripped, then there's a way to go through and actually get money, calculate the dollars. In addition, just so you can see, there are some other resources there if you want about some of the payment deferral service, payment deferral programs available by some of the insurance companies, some information about employees and employee benefits, our webinars, discounts on personal auto policies that have been rolled out by many insurers, and some industry-specific information as well. Let me just take a quick look at the Q&As. There's some that are a little bit more specific. We'll try and go through them and answer them afterward if it's not particularly subject to the whole group. I think we've hit most of them. And we'll go back through, as I said, and read them and try and hit on any specifics that we've missed. In terms of your time, we really appreciate being able to spend some time with you. I think, Bernie, the key, and just to summarize, is we've looked at the coverage. The insurance companies are saying no. I think others are saying there's some possibilities here. We want you to be aware of where we think the possibilities are the greatest. And we think that it's a good idea to hold off and wait and look at how to present your claim with the greatest possibility of success. Because right now, the insurance companies have the money and they're not going to give it out easily. And they've said that. So the question is, how do we put them into a position where they do have to pay? And I think where they see that they have to, and they're able to, they will. But we need to get them into that position. And that's not easy. If it were, then we wouldn't be having this call. Thank you very much. Again, we really appreciate your time. Bernie, thank you for joining me here. And we look forward to maybe a follow-up as things progress.
Thank you.